Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Looming deadline. President Trump escalates his demands for a deal with Iran, threatening to destroy Iranian infrastructure if his terms are not met. Oil supply disruptions are back in focus as Iran warns it would respond to strikes on its infrastructure by ramping up its own attacks on energy sites in the Persian Gulf. And as threats to the region escalate, we speak to Chatham House Associate Fellow Neil Quilliam about how leaders in the Gulf are now assessing their relationship with the U.S. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Very eventful Easter weekend, I've got to say, especially Easter Sunday, with that Truth Social post that came through from President Trump. Quite a sweary post, but really amping up his threats on Iran as we get closer and closer to that 8 p.m. Eastern time deadline, which translates to around 4 in the morning Dubai tomorrow. So critical time. We're going to talk about what to expect in the next 20 hours or so in just a moment. But in anticipation of this deadline and ahead of that deadline, this is the setup this morning. Moderately cautious activity out of Asia Pacific. So the handover there is somewhat leaning towards the green, up 0.4%. S&P futures, though, dipping into the red, down 0.4%. Yesterday, thinner liquidity day than usual. Of course, it was Easter Monday. So many markets and many market participants were out for trading, and the market didn't really know what to do, was whipsawing with all of the headlines that were coming through from the U.S., but ultimately a better close for Wall Street yesterday. We also had better ISM numbers come through too. So with everything that's going on, the U.S. economy actually, underneath the surface, still seems to be showing signs of resilience. So just bear that in mind as we think about the Fed and the reaction function to the war with these inflation shocks. And speaking of inflation shocks, Brent sitting at $111 here, $111.50 is where we're at, 1.6%, so still at the highest level since 2022. Really continues to push higher given the uncertainty about what could happen and ongoing strikes at key infrastructure, including energy infrastructure, that has not stopped over the course of the weekend. So keep that in mind alongside the effective control of the Strait of Hormuz now by Iran. And then the USD gaining a bit of ground this morning, up about 5 basis points. Now, what are the odd markets telling us, the betting markets, about the possibility of a ceasefire? Always good to look at that. April 30, this is what polymarket odds are for reaching a deal by that stage, around 27%. So essentially, obviously, as we get closer to the deadline, that line chart is going to move lower and lower. But the bottom line is there aren't a lot of hopes, at least in betting markets, that we are going to get a sustained ceasefire or a truce come this deadline in the next 24 hours. So that's something to bear in mind, despite the fact that overall equity markets continue to trade quite robustly. So there's a bit of a discrepancy between what betting markets are saying, the latest developments on the ground, and of course global equity markets. But speaking of equity markets, let's check in on how markets in Asia are faring. Min Lo is in Hong Kong for us. Min.
Hey, Jumana, as you can see, things are looking a little bit mixed right now. And as you said, there's a whipsaw in markets, especially the Kospi. Now it's looking flat, but it's been flipping between red and green, right? Despite the standout profits from Samsung, which I'll get to in a little bit. But still, it's not doing a whole lot here. Markets pretty range bound today. Hong Kong markets are closed, but Hong Kong futures are also under pressure as we count down towards this midnight Eastern time deadline when President Trump has threatened to blow up bridges and power plants in Iran if a deal is not reached, but still the Asia Pacific benchmark still moderately in the green, which shows you the level of complacency from investors right now, perhaps not really believing that Trump is going to follow through, right, given that he has blown past several deadlines in the past. You flip the board and take a look at the market movers in Asia. It's been the tech stocks, because I mentioned Samsung earlier, phenomenal preliminary profits in the first quarter. We're talking about an 8-fold increase. Its profit in the first quarter was more than what it made in the entirety of last year. SK Hynix expecting to see record profits as well. Hon Hai reported over the long weekend, also meeting analyst estimates, but this stock is down today. But overall, it seems like the AI demand still remaining very solid despite the Iran war. Jumana.
Min Lo in Hong Kong, thank you so much for the run through. Now, our top story, less than 24 hours remain before U.S. President Donald Trump's latest deadline on Iran expires. Tehran has so far rejected a U.S. ceasefire proposal sent via Pakistan while demanding a permanent end to the war. But the U.S. president is escalating threats to obliterate key Iranian infrastructure if his terms are not met.
We have a plan, because of the power of our military, where every bridge in Iran will be decimated by 12 o'clock tomorrow night, where every power plant in Iran will be out of business, burning, exploding, and never to be used again. I mean, complete demolition by 12 o'clock. And it'll happen over a period of 4 hours if we wanted to.
Well, joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, and Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Laura, I'd like to start with you. We just heard comments there that President Trump was delivering yesterday at a press conference and really ramping up his threats to strike at Iranian infrastructure. The clock is ticking. We know that there's a deadline. What more do we understand about what the U.S. are looking from the Iranian side in the next 20 hours or so?
Yeah, Trump has set this deadline, which is hits in about just 20 hours, where he says if Iran has not agreed to some sort of deal specifically to open the Strait of Hormuz to allow what Trump has called the free travel of oil through that strait, that he would target some of these civilian infrastructure sites within Iran, things like bridges and roads and energy sites. And he's said he would move swiftly, by midnight Tuesday, roughly 4 hours after that 8 p.m. deadline. He said that those would all be obliterated. This certainly suggests that he is looking for escalatory actions. The other main thing he talked about in that press conference is also how much he wanted to take Iran's oil. He, said that it was a mistake that didn't happen after Iraq, and that the spoils, as he framed it, belong to the winner here. So a lot of his comments in the past 24 hours or so have really been focused on additional military attacks, additional military occupation. Something like, occupying Karg Island or taking Iran's oil reserves would be a lengthy and costly and very involved military campaign from the U.S. side. So Trump's mind, at least his public comments suggest his mind is there rather than in reaching some sort of peace agreement, over the next day or so.
Yeah, and Stuart, with that in mind, have we heard from the Iranian side? Have they put forward their own counter terms for what the U.S. is proposing?
Yeah, I mean, they have. I mean, the short answer is that they've rejected the U.S. peace plan, but there are basically three tracks here. So number one is the U.S. proposals, which largely center around missiles, the nuclear file, the proxies, reopening Hormuz, all the things that we've been hearing over the last several weeks. On the Iranian side, it's much more about an end to hostilities everywhere, including in theaters like Lebanon, but also war reparations, aid for reconstruction, control or at least some sort of mechanism for controlling Hormuz and so on. And then there's this third track that have been put forward by other countries, which largely seem to center around a 45-day ceasefire while they work out the details. But the bottom line is that of the details that we've seen of each of those plans, none of them seem to really fit together. So there doesn't seem to be much common ground here in terms of a path forward so that you have a permanent ceasefire and some sort of resolution over Hormuz.
Yeah, and then in light of what you just said, Stuart, I guess then the options for President Trump become follow through on the threats or push the deadline out once more. Let me just ask you, if they do end up, if the U.S. ends up following through on those threats to strike at Iranian civilian infrastructure, let's just take a step back, because already what we've seen is civilian infrastructure has been targeted. Over the course of the weekend, we know that joint U.S.-Israeli operations targeted steel, petrochemical facilities. In return, Iran has also hit at some key civilian infrastructure around the Gulf, including a desalination plant in Kuwait. How much further could this go?
I mean, the short answer, it can go an awful lot further. And if you think back to the first days of the war, end of February, beginning of March, I think in terms of the escalatory response, that was out of all proportion to what most people were expecting. So that is kind of the benchmark for how far Iran is prepared to go in its retaliatory strikes. They have been, prolonged and intense, and as you say, have been very widespread in terms of the targets that they're prepared to go after. And the bottom line here for Iran seems to be if you start taking out a particular type of infrastructure or military facility or anything else, we will do likewise on the other side of the Gulf. And they've followed through on that repeatedly. So it kind of depends on what the US administration decides it's going to go after. If it, as you say, it goes through with its current deadline, which it has pushed back repeatedly. But yesterday we heard about bridges, we heard about power plants. In previous declarations, it's spoken about desalination plants, it's spoken about lots of different things. So it really depends on the targets they go after and then what options that leaves for Iran in terms of its retaliatory response.
Yeah, and of course the big question as to whether if they do that, it would constitute a war crime under the Geneva Convention. And there it becomes a lot more questionable depending on what they're hitting exactly. Laura, let me just ask you, because this is also very pertinent to how long this war could go on for. How is U.S. public opinion evolving? And we're entering into the 6th week now. Is there a sense that the American public would like to see an end to this war sooner rather than later?
Yes, very much so. 6 weeks is sort of the long end of the timeline that the White House initially gave going into this conflict. And as we've hit that mark, there's been a growing sense that the American public wants to see the U.S. exit this war, sort of regardless of what's happening on the ground in Iran. There was a new poll conducted over the weekend from Reuters that found that only 27% of Americans want to see the U.S. In this war for any period of time. Majorities are looking to get out very quickly. And there's really not a lot of preference for, whether there are certain objectives met. Part of this is because Trump has not laid out a lot of the objectives he's looking to seek, but Americans are growing very wary of the U.S. involvement in this war, the cost of the war, and of course the economic consequences they're seeing at home with gasoline hitting over $4 a gallon with really no end in sight, as they were already, even before this war started, facing a lot of price pressures. There's really not a lot of hearts and minds that Trump has won with this war, and a lot of people are willing to see an exit here very swiftly.
Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Thank you so much. And Laura Davison, Bloomberg's Washington Deputy Bureau Chief. Thank you. Now, stocks and crude oil have whipsawed amid uncertainty ahead of President Trump's latest Iran deadline. This comes as tentative ceasefire signals are tempered by the risk of further escalation. Joining us now is Mehvish Ayub, head of Managed Solutions Advisory Dubai at Bank of Singapore. Mehvish, how are you thinking about the possibility of a binary outcome in the next 24 hours, either a massive escalation or a ceasefire?
Good morning, Jemana, and thank you for having me on. And as previously mentioned, it's so much uncertainty at the moment. Any given day, we have concerns about a significant escalation, or there is potentially a deal around the corner. So in light of that, the macro environment, we think, will be subject to considerable bouts of volatility. And we have seen core asset classes in terms of traditional equities and bonds both suffer, actually, not necessarily equally, but certainly the US market as such. So given that, we're really looking at diversification, we're looking at portfolio resilience to try and temper the volatility that we think will come.
What about the upcoming inflation shock? And we've already started to see signs of it beginning to appear with those Eurozone inflation numbers last week. Are market participants sufficiently pricing in what's going to come later down the track?
Yeah, I think you raise a really good point. So in our opinion, the first order inflationary impact and a quick end to the war is what is being priced into markets. I don't see sort of equity markets where they are really pricing in any tail risk scenarios and escalation from that 20-hour deadline thereafter.
What about rates pricing? I thought this was interesting. I was taking a look this morning at what's priced into respective central bank curves, rates curves. And the U.S. basically is flat for 2026. The European rates curve is pricing in 3 hikes by the end of this year, the UK 2 hikes by the end of this year. Why is the market so quick to account for a faster hiking cycle out of the ECB?
So I think this is really to do with the dynamics around currencies. So the US dollar actually to date has been a beneficiary of the conflict because it has implications in terms of a positive impact on the US trade balance. Excuse me, very much a reversal of the trend that we saw in 2025. But I think really interest rate differentials going forward in terms of the ECB and the Bank of England could be driving the US dollar in a different direction. And in the medium term, that tends to be quite a strong driver of currencies. But clearly, what is being priced in by the market right now is a much more significant inflationary impact in regions outside of the US, such as Europe and the UK. Having said that, what are we seeing in equity markets? We're actually seeing some of the European regions and emerging markets still up year to date, whereas the US and the S&P and NASDAQ are actually down year to date.
Yeah. How do you think about, let's say in the next day or so, there is a massive ramping up of military operations. And on the back of that, you see a massive uptick in the price of oil, let's say all the way up to 140, let's say, hypothetically. In that situation, would market participants be quick to price in, say, the energy demand destruction story and therefore the growth impact? Or do we have to go through the sequencing of first accounting for higher inflation and then later on the growth impact to come?
So actually, you raise a good point. I think if we actually look at the market reaction, it is shifting between just a pure inflationary through to a stagflationary impact. And you could see that especially more so in the movement of rates. But I do think if there's significant escalation, we shift very quickly away from more the inflation concern and actually looking at growth. And I think that is the risk that is not really being priced in by markets, because a growth shock has significant implications. And I think it's no longer than just a regional conflict. It's much more of a global conflict. Ultimately, those high energy prices are going to feed into consumers' pockets, and it's going to impact corporate profits as well. And you really can't escape the impact on broad asset classes.
Yeah, and I see that you've also changed some of your own tactical asset allocation from being overweight to Asian markets to neutral now.
Yes, that's correct. That was a decision that we took in early March. 3 key reasons around that. One is more of a risk management strategy, so not wanting to be overweight equity in this environment at all. So the only overweight we had was in Asia Pacific ex Japan, and so we brought that down to neutral. Secondly, the broader risk reward of owning equities, an overweight to equities in this environment is not as attractive as what it was before. And thirdly, just with the acknowledgement that Asia is much more dependent on oil imports, and so there could be an impact there. So just bringing that really back down to neutral, and again, really emphasizing portfolio diversification, resilience, looking at what safe havens are out there, how they've been performing year to date. And actually, I think, people think about the traditional US dollar, they think about gold, but actually even within the equity region, being geographically diversified, sector diversified, having high quality stocks in there with robust balance sheets and pricing power is really going to help navigate multi-asset portfolios going forward.
Mehvish Ayub, Head of Managed Solutions Advisory Dubai at Bank of Singapore. Thank you so much for coming on our show. Really appreciate it. Now, oil is edging higher as U.S. President Donald Trump escalated threats to obliterate key Iranian infrastructure if his terms aren't met by Tuesday's deadline. Tehran says it would respond by ramping up its own attacks on energy infrastructure in the Persian Gulf. Joining me now is Karen Young, Senior Research Scholar at Columbia University Center on Global Energy Policy. Karen, it feels like another deadline, of course, that has been set by President Trump, but also this one is extremely critical in terms of the consequences that it could have on the region from a humanitarian standpoint, civilian standpoint, and of course on key infrastructure as well. How are you thinking about the risks around this upcoming deadline, the next 24 hours?
Well, again, we're all watching the clock, and it is a good chance that the president delays. But at the same time, we are on this escalatory cycle. So the pricing risks that we're seeing certainly have a long way that they could go up. As you just suggested, we could very easily in the next 24 hours be in a very different price environment for both Brent and WTI. And we've seen some strange backwardization happening there. And the risk, of course, for damage to more infrastructure within the Gulf as a retaliation from whatever the US and Israel do in Iran, I think is weighing very, very heavily on the region and as a cost that perhaps has not been factored in very well in the American political environment and what that does in terms of the second order effects and sort of global ramifications, particularly what we're seeing in petrochemicals, not just in crude. So, you know, this is the moment where it just is intensely critical, and we could see a major escalatory kind of cycle begin in the next day or so. And there's nothing to do but to wait.
Yeah, that inevitably that's the conclusion, I guess, for everybody here in the region. Let me just go back to what you were saying about some of the energy disruption that has occurred, and not just because of the effective closure of the Strait of Hormuz, but because of actual destruction, physical destruction that has occurred at some of these key energy sites. And I wonder whether I'm not just talking about oil and gas here, but also oil products as well, whether there's been a sufficient repricing to account for the amount of disruption that has taken place, or do you still detect an element of complacency in some of those markets?
Well, I think we don't have perfect information about damage that has actually been done, whether it's to refineries within the GCC. We've had some kind of stops and starts. We've had attacks on many ports across the Gulf. And not just in refineries and oil and gas, but also to aluminum plants, to data centers, to any number of important kind of mechanisms within the regional economy. And so it will take some time to assess that damage, to understand the kind of second order effects of it. And I think we're very concerned right now of attacks that have happened just recently on Jubail in Saudi Arabia, and what that means for some of the major petrochemical and SABIC production there.
Yeah, in recent days, we've seen petrochemical facilities being targeted on both sides. Let me ask you about the knock-on effects to the U.S. consumer. And, President Trump will say that the U.S. are energy independent, but at the end of the day, the price of gasoline is still following very strongly, and it's very highly correlated to the spot price of Brent and WTI. At what point do you think is there any price point for retail gasoline prices where there will be so much pressure on the president to wind down this war? Is it $4? Is it $5, which is where we got to back in 2022?
Well, we've surpassed the $4 mark, so we're climbing there. And this is this, odd barometer of American political pressure. But it's hitting, I think, and will continue to hit Americans in very different ways. So first we see it, of course, in transit fuels, but we're seeing it, and we will continue to see food price increases, but also into consumer goods, anything with plastic packaging, anything with large polymer sort of components, whether that's in fast fashion or toys or any anything that requires packaging, even like wood materials, are going to be inflationary. So all those things are coming and really, in some ways, already beginning to be felt. And Americans have another barometer, which I think matters maybe more, which is the price of borrowing for homes, the mortgage rate. And the 30-year fixed mortgage rate in the U.S. right now is about 6.5%. It's not going to be going down. And so, people who are looking forward 6 months, a year to buy a home are right now having to reckon with the fact that we are going into certainly an inflationary environment. And so I think that is what Americans will be thinking about and putting pressure on politicians, particularly as we get through the midterm elections in the fall. But, all of these things can change so quickly in the next couple of days or so and get much worse.
Yeah. And of course, Karen, one of the big questions is the fate of the strait, so to speak. How much upward pressure could we see structurally on energy prices if we end up in a situation where Iran still has some effective control of which vessels can pass through the strait?
I mean, I think a system like that, where you have Iran putting a toll, whether it's $1 per barrel, 2 million per tanker, is just not tenable in any long-term fashion. It just can't hold. And so what would essentially happen is that you get some sort of military intervention, escorts of tankers from the Iran's labeled unfriendly countries. And that just, prolongs the aspect of a military intervention and potential for mining and attacks on ships, which will keep the price higher for longer. So I don't think that's a long-term solution, but it does mean that we see higher prices for longer. I think more likely is that we see a much further price hike in the event of continued conflict and escalating conflict. And there's plenty of runway for that to go. I think you mentioned 140 number, but we could see even much higher than that. Certainly, if we see a diminishment of shipments or any kind of attacks on those diversions of crude that we've been able to secure because of pipelines in the Arabian Peninsula right now.
Karen, always good to chat to you, and thank you as ever for staying up late for us, a senior research scholar at Columbia University Center on Global Energy Policy. Well, let's take a look at Monday's close for some of the regional bourses as we head into, again, a very critical deadline over here in the region. The Tel Aviv Stock Exchange closed up in the green. Tadawul relatively shielded because of the higher oil prices and the ability of Saudi Arabia to reroute via that east-west pipeline. Dubai, another day in the red, down 0.7%. Egyptian Stock Exchange up 0.8%. Now, coming up, we are going to be speaking to Neil Quilliam, Associate Fellow from Chatham House, on how the Gulf is repositioning its reliance on the United States. That's coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Looming deadline. President Trump escalates his demands for a deal with Iran, threatening to destroy Iranian infrastructure if his terms are not met. Oil supply disruptions are back in focus as Iran warns it would respond to strikes on its infrastructure by ramping up its own attacks on energy sites in the Persian Gulf. And as threats to the region escalate, we speak to Chatham House Associate Fellow Neil Quilliam about how leaders in the Gulf are now assessing their relationship with the United States. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. This is how markets are shaping up as we get closer and closer to that deadline by President Trump. Let's see if it's a hard deadline, if he actually follows through on the threat to quote unquote obliterate Iran's infrastructure. I mean, these are very, very serious threats for the region. So sitting on a state of high alert over the next 24 hours. The Asian markets, however, up 0.4%. So a mildly positive handover from Asian equities this morning. S&P futures a bit more cautious, though, down 0.4% after a better end to Wall Street yesterday on trading. Brent inching higher once more. Some nervousness there, too, especially as we speak and report on more energy infrastructure sites being targeted over the course of this weekend, including some key petrochemical sites in Iran, in the UAE, and overnight reportedly in Saudi Arabia as well. So Brent up to $111 a barrel now. And then the USD not doing a whole bunch, but since the beginning of this war, and we've been going on for almost 6 weeks now, we have seen the dollar benefit as a safe haven. And then switching over, we spoke about this earlier, but I thought it was interesting to put in what Polymarket are pricing in, or the odds and betting markets for a possibility of a ceasefire by April 30. It's pretty low. We're sitting around 26, 27%, i.e. there's not a lot of faith that the two sides can actually reach a ceasefire by the end of this month, even though we're getting closer and closer to that deadline. And that is mirroring the reporting that's coming through on essentially the two sides being very, very far apart in terms of what the U.S. are demanding and what the Iranian side are counter-demanding. Still a lot of daylight between the two and a lot of defiance still coming through from Iran. So that's where we are at. With that in mind, let's check in on how these markets in Asia are faring. Minimum low is in Hong Kong for us. Minimum, and I said, broadly speaking, the handover has been positive. Give us more details.
Yes, handover has been positive. It seems like investors are pretty complacent given the threats from President Trump, with the Asia-Pacific benchmark still moderately in the green. And we've been seeing whipsawing of stocks, but also in the bond market, right? These yields were mostly pointing higher, but now it's pointing lower, with bonds in Japan now catching a bid. We did have the 30-year bond auction today seeing tepid demand, but the 10-year yield is hitting very high levels, breaking above the 2.4% level, and that continues to be concerned around inflation, right? Because if you look at traders' bets on the interest rate hike in April, they are looking at potentially up to 70% chance of a hike from the BOJ, despite the BOJ so far refraining from, being pushed into a corner when it comes to that rate decision in April. You flip the board and take a look at the FX picture here as well. We are seeing the yen pushing ever so closer to that 160 level, really defying all the warnings from the finance ministry. Certainly we'll be watching for any intervention from the government, the UN as well, weakening a little bit today. But overall, we are seeing Asian currencies under pressure, with the dollar catching a bid amid this uncertainty.
Min, thank you so much. Well, just a couple of headlines that are coming through. The bridge connecting Bahrain and Saudi Arabia has closed temporarily. The King Fahd Causeway Authority has put up a post on X at 5:19 a.m. local time. They say that this is a precautionary measure because of alerts over the eastern district. So it is a key bridge for anyone who is unfamiliar, and especially at this time, with the Bahrain airport essentially being closed, there are no alternative routes for Bahraini residents to leave the country. So potentially quite significant development there, but the authorities are saying that it is a temporary closure of that key causeway linking Bahrain to Saudi Arabia. Now, President Trump has ramped up his threats ahead of a deadline he's imposed for Iran to reopen the Strait of Hormuz. This as Gulf Arab states are questioning the reliability of the U.S. to limit escalation. Joining us now is Neil Quilliam, Associate Fellow of the Middle East and North Africa Program at Chatham House. A lot to discuss with you today. I actually want to start with this threat that has come through from President Trump, and if he actually does follow through, which means they would go after Iranian power plants at a wide scale, and in response to that, most likely you would see Iran retaliate against Gulf infrastructure in a more meaningful fashion. What do you think the line is for Gulf countries to move from a defensive posture to a more offensive posture and potentially participate in this war militarily, if it does actually come to that?
I think there's still a great reluctance for the Gulf states to engage in this militarily. There's clearly a spectrum. I think the UAE sits on one end of the spectrum. Oman sits on the far end. So there is a prospect that the UAE, perhaps Saudi, could engage, depending where the Houthis sit in this conflict. But I think, for the main part, I think they want to sit out. They don't want to be drawn into the conflict, not necessarily because they don't wish, for the Iranian regime to be removed, but because they're going to have to live with Iran, whatever that looks like at the end of this conflict, whether that pushes out to the end of April, as your polymarket graph was sort of pointing towards, or not. There will be a major concern that if they actually engage in this, then they will be opening the can to something much larger and something that they'll be unable to control in a post-conflict zone.
Yeah. So still a degree of cautiousness vis-a-vis getting involved militarily. What about the efforts to reopen the Strait of Hormuz? And again, we've heard from many Gulf states, and perhaps the most vocal have been the likes of the UAE, saying that this is an outcome in which Iran still effectively maintains control or tries to control the Strait of Hormuz is unacceptable for them. How do you see Gulf states' participation to help bring back the strait to what it was before the war?
I mean, the US would absolutely have to take the lead on this, and the European states would need to come together. So the UAE in particular, perhaps Saudi could provide some cover to be part of a broader and wider coalition, but there would have to be, clarity in terms of the mission, clarity in terms of the longevity of that mission. So they could provide material support, but they wouldn't just simply go in with the US. I mean, we've heard President Trump talk about opening the strait now for a good 3 or 4 weeks. We've seen nothing material in terms of that. We have seen the UK sort of try to take a leading role in coalescing, building a coalition of forces that would move in a post-conflict phase. But there's nothing concrete at the moment, I think, through which the Gulf states can kind of anchor themselves to. We are hearing a lot of bullish comments, particularly from the UAE presidential advisor Anwar Gargash, and we've also seen the op-ed from Al-Otaiba, the UAE ambassador to Washington. But at present it's a lot of talk, it's a lot of strong talk, but we're not actually seeing a lot materialize and come together.
Let me ask you about also an article that you and your colleague Sanam Vakil put together in Foreign Policy, and you were evaluating the Gulf Arab states, their defense and how they're going to be thinking about defense in coming years, but also the security arrangement that many of them have with the US. And I wonder how you see that evolving once this war is over, and whether from their perspective, actually hosting the US bases has made them more vulnerable.
I mean, clearly the hosting the US bases has made them more vulnerable, but there is no alternative. There will be no alternative, from now until the medium term. And by medium term, I mean for the next 4 or 5 years at least. There is no real alternative to the US. But what we've already seen prior to the war, and we're going to probably see accelerating, are the Gulf states seeking to develop sort of supplementary partners, say, not alternative partners. So working together would be the first step. I mean, we've long heard of the Arab NATO model. It always seems very far-fetched. There are big degrees of separation amongst the 6 Gulf states and reasons why they wouldn't coordinate and cooperate. But now, given their vulnerability, given what they're suffering, number one, from US unpredictability, from seeing Israel in the ascendant and carrying out attacks on neighboring states almost at will, and now Iran closing the Strait of Hormuz, those Gulf states are going to really have to sort of come together and work together, but also creating what Sanam and I sort of call those mini-lateral arrangements, working with Egypt, working with Jordan, working with Turkey, working with Pakistan, in smaller sort of military configurations, which are sort of issue-focused and issue-based, as a prelude to sort of moving towards a system in the longer term when their dependence upon the US sort of diminishes. But no doubt about it, the US is going to be a major military partner for a long time to come.
Yeah, makes sense. Neil Quilliam, thank you so much for joining us, Associate Fellow in the Middle East and North Africa Program at Chatham House. As the U.S. deepens its involvement in the Middle East, the cost of fighting is climbing, drawing criticism from lawmakers. Bloomberg's Shakil Omari explains how much the conflict could cost American taxpayers.
From a barrage of strikes to more troops on the ground, growing tensions in the Middle East are leaving American taxpayers to foot the bill. Some critics not in favor of President Trump's decisions.
He took us into this war in Iran without a clear plan, and it's costing us billions of dollars a day.
To date, the conflict has cost more than $25 billion a week, $11 billion spent just in the first 6 days. With troops on the ground, Bloomberg analysts estimate costs could climb between $15 and $20 billion a month. For perspective, Operation Iraqi Freedom carried a lower monthly cost, between $8 and $15 billion. Total cost topped $806 billion, according to data from the Center for American Progress. Occupying Iran's Karg Island could drive monthly expenses up $10 billion more, costing up to $30 billion a month. To cover further expenses, the Pentagon is planning to ask Congress for $200 billion.
As far as $200 billion, I think that number could move, obviously. It takes money to kill bad guys.
President Trump says he predicts ending the war on Iran within 2 to 3 weeks. The U.S. defense officials say the key details about U.S. military spending, including planned budgets for services, will be released on April 21st. Shaquille Omari, Bloomberg News.
Coming up, we'll bring you the latest on Israel strikes in Beirut and around Lebanon as the conflict in Lebanon escalates. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. Israel says it has begun strikes on Hezbollah infrastructure in Beirut as it steps up its campaign in Lebanon. The latest wave of attacks follows some of the deadliest days in recent weeks, with dozens reported killed, especially on Easter Sunday. For more, we're now joined by Bloomberg's Dan Williams in Jerusalem. Dan, walk us through the latest on that front in particular. It's a bit of a forgotten front in the context of the regional war, but at the same time, President Trump is working towards this make or break deadline for Iran. What could be the knock-on effects for the Lebanon front?
As you noted, Jemana, often eclipsed by the Iran war has been what is the second front of this war, a war that's far more consequential, arguably, for millions of Lebanese and Israelis. That is the front between Israel and Hezbollah. Hezbollah has long been Iran's top guerrilla ally in the region. It entered the war 2 days after that war was launched by the US and Israel against Iran, reigniting effectively that front, a front that had never really been calmed, but had been simmering since a November 2024 US brokered ceasefire between Israel and Lebanon that was meant to have contained and disarmed Hezbollah internally in Lebanon. That never happened. And after Hezbollah fired a volley of rockets on March 2nd into Israel, the Israelis responded with great force, including eventually an invasion of Lebanon. Something like 40,000 soldiers now in the south of that country on what Israel says is a push to drive Hezbollah back, prevent it repeating past attacks on frontline Israeli communities, civilian communities, and potentially destroy and dismantle the organization through force. There has been some doubts expressed in Israel whether that is possible. Now, while Iran is certainly the overarching enemy for Israelis in the region, certainly the patron of Hezbollah and other groups that Israel's been dealing with for decades, many Israelis see Hezbollah as the immediate threat. It has been in the past, clearly visible across the fence separating Israel and Lebanon. So whatever happens on the Iran front, whether there's a ceasefire deal, whether there's an escalation, the Israelis will want to pursue in parallel that war in Lebanon. And if there is a ceasefire deal or even a peace deal in Iran, eventually it could be that this secondary war, the second front, will prove more protracted because it's simply going to be more difficult and involves troops on the grounds, unlike the war in Iran, which is almost entirely an air war for now.
Yeah, and you've been saying that for a while, Dan, in your own reporting about the possibility of this becoming a protracted conflict. And let me just ask you whether there's also been a change in the IDF strategy becoming a lot more assertive, targeting areas that would typically not be targeted. And over the weekend, of course, many people were surprised to see them target an apartment building in a predominantly Christian area in the mountainous parts of Lebanon. What does this tell us about IDF's strategy here and their going after specific apartment buildings in all of Lebanon and not just in the southern part of Lebanon or in the southern parts of Beirut?
Here, the Israelis tell it these are surgical strikes based on intelligence, almost always Hezbollah or Iranian assets figures within civilian neighborhoods, Oftentimes there have been mistakes. Oftentimes Lebanese and others have accused Israel of excessive force. I think force especially is being felt in the south of the country, where the Israelis are saying explicitly that they will destroy the front row of Lebanese villages facing Israel, saying those villages have effectively been used for decades, potentially, as cover for planned Hezbollah attacks of the kind we saw on October 7th, 2023, from Gaza. There definitely is something of a scorched earth approach here. The Israelis taking off the gloves. It could be they feel that given that they have US backing in Iran, they can expect US backing, perhaps implicit US backing, tacit US backing when it comes to their tactics in Lebanon. And as I said, whatever happens in Iran, Israelis definitely want to see a change on the Lebanese front. It's so much closer. It's so much more material. It's so much more tangible. I think potentially some Lebanese would share that. They're unlikely to say so publicly. But given the Lebanese government's position, it could be long run that even some within Lebanon would like to see Hezbollah contained through force, if not through consensus.
Yeah, very fraught times in Lebanon as well, with that huge humanitarian displacement as well. Up to 1.1 million people reportedly displaced overnight per the UN. Dan Williams, thank you so much. Now, coming up, NASA's 4 Artemis astronauts swung behind the moon and are headed home. We'll bring you the latest next. This is Bloomberg. NASA's 4 Artemis astronauts are headed back to Earth after a record-breaking journey behind the moon. The Orion capsule came within 4,067 miles of the lunar surface, the closest humans have been in over 50 years. For more, we're joined now by Bloomberg's Danny Lee. Well, Danny, talk to us about how significant this mission was, and what has Artemis proven so far for NASA's long-term plans?
Yeah, Artemis 2 is halfway through a 10-day program, and this mission has proven successful. It has broken many records thus far. And this mission is successful, and for NASA, importantly, this is a critical test flight, a dress rehearsal to show that its systems are capable of taking humans into deep space and getting them back safely. And more importantly, the goal is to get Americans back into space and onto the moon's surface before the end of the decade, which is going to be critical. But ultimately, there is a lot at stake for the companies involved, such as Boeing and Lockheed Martin, and also for the newish NASA administrator, Jared Isaacman, a former astronaut appointed by President Trump, and he has been trying to shift timelines forward to try and get the Artemis program back up to speed. But the reason why there is this concerted effort is because the US wants to try and to get back onto the moon's surface by 2028 before China does, which is aiming to do so by the end of the decade.
Okay, so a bit of a space race there as well. How realistic is this 2028 timeline? Now, what are the next key steps before NASA can actually attempt a crewed landing?
Well, there is another test flight next year, Artemis 3, and that will test the docking procedures of the Orion spacecraft and also another commercial option. And this is to try and help prove that it can then get onto the moon's surface safely. But you have the likes of Democratic Senator Mark Kelly, a former astronaut, who's saying this 2028 timeline is too ambitious, whilst you've got the likes of Republican Senator Ted Cruz saying they need the US to get back into space quickly because it's a strategic imperative when you want to try and beat China. But overall, this is a space program that has spent $93 billion so far, so not cheap. And for Jared Isaacman, over the next 10 years, wants to spend another $30 billion. So overall, the goal by 2028 and beyond is to at least try and get humans back onto the moon's surface in the most challenging way possible. And the space race is very much on.
Danny Lee, thank you so much. Bloomberg space, aviation, and defense reporter, ending the show with a more uplifting note. Though, of course, we are heading into that critical deadline. It is a really serious 24 hours coming up in this part of the world. So we're going to bring you the latest developments, the headlines as they cross. But just as a recap, the two sides are still very far apart. There are very slim chances being priced in of some form of a diplomatic compromise being reached by that deadline tonight, which actually translates to middle of the night over here in the region tomorrow morning. This is a setup going into the U.S. S&P futures, Wall Street, all leaning towards negative, down about 0.4%. European markets, however, leaning towards positive, up 0.1%. That is it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.